How are you doing today? If you can hear me, how is the sound? Can you hear me? If you can hear me, please drop a comment. If you can hear me, how is the sound? Am I audible? And can you see my screen? Drop a comment if you can see my screen. Let me know. Let me know. Let me know. I would like to see your comments. Can you hear me? 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 Good morning. Good morning. You're welcome to today's market outlook session. You're welcome. You're welcome. Can you hear me? Am I audible? Can you see my screen? I want to believe you can hear me. So let's go straight to business. Let's go straight to business. Okay. So let's start by looking at the calendar for the week. Today is Monday, 26th of August, and as you can see, there are no major news for the dollar. There are no major news today. Okay, so we should expect low volatility in the market today because there is no major news. Okay, so we should expect low volatility in today's market. I always advise that if you want to trade on Monday, you should reduce your risk on Mondays. Okay, reduce your risk on Mondays because most times price just go in a range on Monday. Price ranges on Monday, so you want to risk less on Monday than on Tuesday, Wednesday, Thursday. Those are the three days that the market is very volatile. You want to take more on those days. Okay, I've always had percent of your account of your capital on any trade risk more than 2%. If you're risking more than 2% on any trade, you are leveraging. And those who over leverage don't last in the market. They don't make money consistently in the market. So you shouldn't risk more than 2%. Okay. So on Mondays, you could risk 1% or less. Okay. So that's it for fundamentals. Okay. No major news today. So let's go to the chart. If you have any question, if there's any pair you want us to look at together, please drop it in the comment section. Saudogu, good morning. Mr. Emigrate, good morning. I can see you. Thanks for joining. I believe you can hear me clearly. Okay, so let's go to the chat. If there's any pair you want us to look at together, please drop it in the comment section. Good morning. Drop it in the comment section. If you have any question, drop it in the comment section. Okay, so let's start with gold. So the first thing we're going to look at on gold is the how last week candle closed. That's the first thing we're going to look at for. How last week candle closed will determine the direction we'll follow this week. Okay, how last week candle closed will determine the direction for this week. So let's go down to let's go to weekly time frame. I think last week was strongly bullish. Yeah, last week was bullish. Okay, it was bullish, and you can see how it closed. You can see how last week candle. This is a spinning top. Some will call this hanging man. Yeah, some will call this hanging man. Okay, this is a spinning top. Okay, on the weekly time frame. Last week candle closed as a spinning top. Now, if we switch down, we now need to switch down to daily time frame. If we are able to identify a bearish reversal pattern on the daily time frame, then we should be considering going bearish on gold this week. I repeat, if we are able to identify a bearish pattern on the daily time frame after the spinning top that formed on the weekly time frame, we should be considering going bearish on gold this week. Now let's go down to daily. We had on daily after the close of the weekly candle. So you can see the pattern we had on the daily time frame. This is a bearish reversal pattern. A bearish pattern. On Monday we had a shooting star formed on the daily time frame. A shooting star formed on a daily time frame. This bullish shooting star, and after the formation of a bullish shooting star, you have to wait for the next candle to close bearish before you sell. So after the formation of this bearish candle, after the formation of this bearish candle, that would have been a good time to sell. Okay? After the formation of this bearish candle, this is a valid bearish reversal pattern. This is a valid bearish reversal pattern. You would ask, why is it that gold is buying? Why is it that gold is buying? Why is it buying? Because price ought to have dropped from this point. Okay, now after you've identified candlestick patterns on higher time frame, you need to go down to lower time frame to ensure that there is a shift in market structure. Now, looking at the daily time frame, the shift in market structure on the daily time frame is supposed to occur at this point. This is the last higher low, the most recent higher low. This is it. And as you can see, this bearish candlestick, the body didn't close below this higher low. That's the reason for this pullback. There was no shift in market structure on the daily time frame. If this candle had closed below the low of this candle, that would be a valid shift in market structure. That would be a valid shift in market structure. But this candle, this bear candle didn't close. The body didn't close below the low of this candle. So it confirmed that gold has changed from bullish to bearish. Until there's a shift in market structure, we cannot go bearish on gold. Are you getting me? So if you are considering selling gold, now let's see what pattern formed on lower time frame after the formation of this shooting star. After the formation of this shooting star, let's see the pattern that formed on the 4-hour, 1-hour time frame. Probably a fair value gap was created after the formation of this shooting star, and what you want to do is fill that fair value gap before going bearish. That could be the reason for the pullback we are seeing in the market right now. Okay, so let's go down to 4-hour. Okay, this is 4-hour. You can see on 4-hour also we had an engulfing pattern. Can you see that on 4-hour we had an engulfing pattern and shift in market structure on 4-hour time frame? Can you see it? At this point, you can see there was a shift in market structure on 4-hour time frame. So what you would have done here, after this candlestick closed below this higher low, what you would have done here is to apply your Fibonacci tool. Okay, apply your Fibonacci tool. Now, as you can see, price is at premium. Okay, price is at premium. And what do you do at premium? You consider selling and not buying. You cannot buy gold at you cannot buy gold. The only reason you will buy gold is FOMO, fear of missing out. Fear of missing out. This would have been the right price or good price to buy gold. You can see we had a bullish reversal pattern here. If you had not entered buy after the formation of this binding bottom, you would have entered buy after the formation of this bullish candle. If you didn't take a trade at this point, why would you want to buy at this point when it's overpriced, when it's overbought? You will be the liquidity if you buy right now. You will be the liquidity. Your stop loss will be used as liquidity. Okay? It's overbought now, so you should be considering selling gold. If you are considering trading gold today, look for a sell setup. Look for a sell setup. Okay, look for a sell setup. Good morning, Mr. Abraham. Good morning, Anayo. Good morning, good morning. Good morning, Onye. Thanks for joining. Okay, so let's go down to lower time frame. I'm sure a fair value gap was created. That is why price is bullish. Let's go down to lower time frame. After the formation of this engulfing pattern, let's go to 15 minutes, not 1 hour. Let's see what we had on 1 hour. Okay, so on 1 hour there was a fair value gap that was created here. That gap has been filled, right? A fair value gap was created at this point. You can see this gap has been filled. Okay, let's go to 15 minutes. Why is price still going up? Let's go to 15 minutes. Likely there is still a fair value gap above this fair value gap that was created on 1 hour. Let's see 15 minutes. Okay, on 15 minutes we have a value gap here too, and I think that gap has not been filled. Okay, it has been filled, right? Yeah, it has been filled. This gap on 15 minutes, I think it has been filled. This is above that gap right now. So let's go to 5 minutes. I'm sure there is still a fair value gap above this 15 minutes. let's go to 5 minutes. There should be a fair value gap above. There is a reason price is still bullish. There is a reason. There is a reason. Let's find out. There is a reason. Okay, so you can see. Yes, good. I think. Can you see? This could be the reason. Can you see this fair value gap? This could be the reason why price is still bullish. Price is inside that gap right now. Can you see that? So once that gap gets filled, wait for a bearish reversal pattern to form inside that gap before we go bearish. Are you getting me? You wait for a bearish reversal pattern to form inside this gap before you go bearish. Let's go back to 1 hour. So you can see price is currently at this fair value gap area. You can see bearish reversal pattern to form before you go bearish. Don't buy gold today. Don't buy gold today. If you want to trade gold, and if you are selling from this area, please don't just execute trade without stop loss, without knowing where you will set your stop loss. If you are selling from this area, your stop loss should be this. Let's say 10 pips. You can set it 10 pips above the high of this candle. Your stop loss should be 10 pips above the high of this candle. I hope that is clear. 10 pips above the high. The high of this candle is the high is, what's the high? What's the high? 2531.6. 2531.6. And if you're entering from this point, let's say you're entering from this point, 25231, 25231, 25231, 25231, 25231. That's about if I'm correct, 90 pips. Yeah, close to 90 pips. 90, close to 100 pips. So your risk on the trade will be as high as 100 pips. If you're okay taking such risk, then you can go ahead and but wait for a bearish. A bearish reversal pattern has not formed yet, so you have to wait for it to form before you go bearish on gold. That's my take on gold for today's market. I hope that is clear. Any question on gold before we move to the next pair? Mr. Adogu, that's my take on gold. Any question on gold before we move to the next pair? Any question? Any question? Any question? Okay, let's move to the next pair. EUGU. Okay, let's see. GU. My bias for GU this week is bearish. My bias for GU this week is bearish. You cannot buy GU. Why would you want to buy GU? When GU was cheap, when it was at a lower rate, you didn't buy. Why would you want to buy now? Tell me. Why would you want to buy? See, GU was strongly bullish last week. And I think the bullish move was to clear liquidity residing at this previous high. That's the reason for the buy we experienced last weekend. Okay. I think there's a liquidity. Okay, at this point also, we had a liquidity. You can see equal highs. This is equal high. You can see liquidity was also residing at this point, and I think they've cleared that area. You can see liquidity was cleared at this high. Liquidity residing at was cleared, and the one I just showed you, okay, equal highs. So liquidity has been cleared. So what you should look out for now is a bearish reversal pattern to form on daily, 4-hour, or 1 hour time frame. Okay. So let's go down to daily after the close of last week candle. Let's go to daily. So on daily last candle, okay, last Friday candle looks like a spinning top, right? Yeah, a spinning top. Okay, this is a spinning top. Okay, this is a top. So if the current candle closes bearish, that's today's candle. If today's candle closes bearish, then we should expect more bearish move on GBP USD. If it closes bearish, we should expect more bearish move on GBP USD this week. Okay. Now, if today's candle closes bearish, note that this high will become an area of liquidity. This high will become an area of liquidity. So if you are considering selling, your stop loss should be at least 20 pips, please. 20, because we have several major news that will be released from tomorrow. And like I always advise, when you know that a major news is to be released Always give price enough room to breathe. Don't use tight stop loss when you know a major news is to be released. That's why I said if you are setting your stop loss, it should be 20 pips, at least 20 pips above this high. If you use this high as your stop loss will be used as liquidity. Your stop loss will be used as what? Liquidity. So stop loss at least 20 pips above. 20 pips is okay above this high before you go bearish. Okay, so on daily, we are able to identify a bearish reversal pattern spinning top, but we need to wait for the next close or before we go bearish on GU. Now let's go down to 4 hour. Let's see the pattern we had on 4 hour after the close of last week candle. So you can see on 4 hour we had a spinning top, this bullish spinning top, and after the formation of a bullish spinning top, you have to wait for the next candle to close bearish. You can see the close next to this is bullish. The one that followed also is bullish. And this morning, the first candle for today was bearish. Okay, this is a valid bearish reversal pattern. This is a valid bearish reversal pattern. So at the moment, GBP is bearish. Okay, considering taking any trades today on GBP I would suggest you go for sell. Go for sell. Okay, go for sell. And if you are selling, like I said, please, your stop loss should be 20 pips above this high. Okay, so let's go down to 15 minutes, 1 hour. Let's see what's happening on those time frame. Okay, so like I said, you don't just execute a trade because you're able to identify a bearish reversal pattern on a higher time frame. There has to be a shift in market structure on lower time frame. And if we go by 1 hour price action, the shift in market structure will occur at this point. This is the most recent higher low. So we need for price to break this low before we go bearish. Don't just jump in and start selling. Don't jump in and start selling. This low needs to, a candle needs to close below this low. Okay, so be patient, be patient. Wait for a candle to close below this low. Okay, and after a candle closes below the low of this candle, you have to wait for a pullback. Okay, after a candle closes below the low of this candle, this becomes your swing low, this becomes your swing high. Apply your Fibonacci from this swing low to this swing high. Wait for price to pull back to a premium level before you sell. It's that simple. Don't complicate things. Okay, keep it simple. Okay, that's it for GBP USD. Look for sell if you want to trade GU. But like I said, we might not see much volatility in the market today because there are no major news, to drive price action. Okay, so that's it for GU. Let's just see what's happening on 15 minutes. Okay, so you can see this is the low on 15 minutes. Okay, so we need the shift in market structure to occur at this level before we go bearish. So you can see price has been in a range since the market opened. GU has been in a range, so we need more confirmation before we go bearish on GU. I hope that is clear. I hope that is clear. So that's the take on GU. If you go to EU, you'll find the same pattern on EU. Mr. Odogu, EU and GU are positively correlated. So you'll find same pattern on EU. Which other pair do you want us to look at? What other pair do you want us to look at? Let me know in the comment section. Okay, Mr. Abraham said we should look at USD card. Okay, let's look at USD card. USD card is negatively correlated with GU. If we are considering selling GU, we should look for a buy opportunity on USD card. Okay, so you can see also USD card has been ranging. It's been ranging, no clear direction right now. But my bias for GU for the week is, for U card is bullish, Okay, is bullish. Okay, but right now price is in range. It's in a range. For liquidity residing, this sell side liquidity at this previous has not been cleared. You can see the market has been testing that level. Okay, it's been testing that level. Okay, but they've not been able to clear these lows. So there's a high probability they will come clear these lows. So if you are considering buying, wait for these lows to be cleared. Okay, if you are considering buying USD card, wait for these lows to be cleared. After these lows get cleared, after liquidity gets swept, then you wait for a bullish reversal pattern to form on 4-hour time frame. Wait for a bullish reversal pattern to form on 4-hour time frame. After the formation of the bullish pattern on 4-hour time frame, you go to 1 hour and 15 minutes and the market structure on 1 hour or 15 minutes time frame. You don't just execute the trade after the formation of the bullish reversal pattern. There has to be a shift in market structure on 1 hour or 15 minutes. Okay? Keep it simple. Don't complicate things. You don't need all those indicators you're applying on your chart. You don't need them. Get rid of those indicators. You don't need them. Okay? You don't need them. Okay, so that's my take on USD card. We're buying USD this week. Australian dollar USD is negatively correlated with USD card. So if you're looking for buys on USD card, you should know what you're looking for on Australian dollar USD. I hope that is there any other you want us to look at? Please let me know in the comment section. If you have any question, please let me know. Let me know. Is there any other pair? If you are yet to like the stream, what are you waiting for? If you are yet to like the stream, good morning, Mr. Ziloft Properties. Good morning. Thanks for joining. Thanks for joining. If you are yet to like, please do, so that others can get to see this video. I'm waiting for you guys before we look at the next pair. Give the stream a thumbs up before we look at the next pair. Before we look at the next pair. Just one like so far, and I have up to like 10 persons on this live stream. Just one like so far. That's not good. That's good. It's not fair. Good morning, Uber. Uber. I hope I got the pronunciation right. Uber. Good morning. Thanks for joining. Which other pair do you want me to analyze? Let me know. Let me know. Let's look at Euro Aussie. I took a trade on Euro Aussie. How is it? How is it? Okay, Euro Aussie is I'm buying Euro Aussie at the moment. I'm bullish on Euro Aussie. You can see trade on Euro Aussie. Okay, I'm buying Euro Aussie. This is my first TP on Euro Aussie. 1.6581. So on this trade, I'm risking close to 70 pips, and my TP is about 100 and something pips. Yeah, 100 and something pips. It's about 1 ratio 1.5 risk reward. Okay, so yeah, Victor. Okay, Victor, how you doing? So that's my take on Euro Aussie. Look for buy. Let's start with the weekly. Let's see how last week candle closed. You can see last week candle closed. Yeah, this is a spinning bottom last week. You can see this is a spinning bottom. Can you see this? This is a spinning bottom on the weekly time frame. And if you go back, you would see this was an area of support also. You can see this was a support at this point. You can see this was a support also at this point. So this level is a key level. So price hit this level, and what pattern formed at that area? A bullish reversal. Okay, so that's the reason I'm buying Euro Aussie. Now, after the close of last week candle, let's go down to daily. So you can see on the daily, had on the daily was a bullish reversal pattern, right? This is a bullish reversal pattern. We had this is a spinning bottom, right? This is a spinning bottom. You can see price went up. This pullback, I think, was to fill a fair value gap. Okay, let's go down to after the formation of this pattern on daily. Let's see what we had on 4-hour. Slightly a fair value gap was created on lower time frame, and that's the reason for that pullback. Okay, you can see no fair value gap here. Okay, so let's go to 1 hour. Let me show you why price had to pull back. So you can see on 1 hour, do we have a fair value gap here? Do we fair value gap here? No fair value gap here, right? There's no fair value gap here on 1 hour. Okay. There's no fair value gap, right? No fair value gap. But there was a shift in market structure on 1 hour at this point. There was a shift in market structure. Can you see that? There was a shift in market structure on 1 hour. So if you apply your Fibonacci, you can see price had to pull back to a discount area. So price is currently at a discount, right? So we buy from discounts. You can see why I'm buying um, Euro Aussie. You see why I'm buying Euro Aussie. So it is bullish, 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 bullish. That's my take on Euro Aussie. That's my take on Euro Aussie. Yeah, I appreciate you all for liking the stream. Thanks, 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 thanks. Some persons are here to like this stream. I don't know why. I don't know why you're here to like this stream. Um, which other pair? Which other pair do you want us to look at? Okay, let's look at DXY. What was happening on DXY? Okay, let's see DXY. DXY. DXY has been in the range, but I expect Y to be bullish this week. I expect DXY to be bullish this week. They might use one of the major news to clear liquidity residing in the previous low before going bullish. Okay, and as you can see, I've identified the most recent lower high on DXY. You can see I've identified the most recent lower high on DXY. So I want to see price break this high. So the shift market structure will occur at this point. So for that to play out before I go bullish on DXY. Are you with me? So it's either they clear liquidity before clearing this previous lower high, this most recent lower high. So those are the two things that is likely going to play out. Okay, on DXY. First, they might go for liquidity before shifting market structure, or they go for shifting market structure. Then we wait for price to pull back to a discount area before we go bullish on DXY. So if DXY is bullish, that tells you that the dollar will be bullish. Dollar will be bullish. So if dollar is bullish, you'll be considering selling GU, AU, EU, NU. Then you look for buys on USD, USD CHF, USD JPY. I hope that is clear. The DXY is used to measure the strength of dollar. The DXY is used to measure the strength of dollar. So if DXY is bullish, dollar is strong. If DXY is bearish, dollar is weak. I hope that is clear. I hope that is clear. That's my take on DX. Victor, I don't understand your question. I don't understand your question. Okay? I don't understand your question. Is there another pair you want us to look at? Is there another pair, any other pair? Okay, let's look at one of the JPY pairs. Which of the JPY pairs do you want us to look at? Which of the JPY pairs? Which of the JPY pairs do you want us to look at? Let's look at GJ. Or let's start with USD JPY. We'll look at USD JPY and GBP JPY. Before we end this session, let's look at USD JPY and okay. So let's start with the weekly time frame. So on the weekly time frame, we had, you can see at this point, an armor formed, and after the formation of the armor, we are supposed to go bullish, right? This is a bullish reversal pattern. So we're supposed to go bullish after the formation of this armor, but what's happening right now? Last week, it was bearish. It was bearish. Last week was bearish. What's the reason for the bearish move we saw in the market last week? Let's go down to daily. I'm sure after the formation of this armor, a fair value gap was created, and price is expected to pull back and feed that fair value gap. And I think that was what played out last week. Okay, so let's go down to lower time frame to identify the fair value gap that was created. Let's go to daily. What we had on daily, no fair value gap on daily. Let's go to let's go to was a fair value gap created on 4 hour? Yeah, we had a fair value gap here on 4 hour. Okay, we had a fair value gap here. This gap has been filled on 4 hour. Okay. Okay, this gap has been filled. It has been filled. Now, I believe there's still fair value gap below lower time frame. Let's go. Let's go down to 1 hour. There's still a fair value gap below. Okay, we had one here. This also has filled. This gap has been filled. Okay, so let's go to lower time frame. 15 minutes. There's still a fair value gap, I'm sure, below. There must be a reason for price to be bearish. For that pullback, there must be a reason. Let's go down to 15 minutes. Let's go down to 15 minutes. Few minutes. So on 15 minutes, you can see we have a fair value gap here on 15 minutes. Can you see this? Can you see this fair value gap? This is on 15 minutes. And also below that area, we still have some fair value gaps here that are yet to be filled. You can see. You can see. That reason USJPY has been bearish, okay, since last week. I'm sure they want to come and fill these gaps here. Once this gap gets filled, then you should be looking for buy opportunity. So right now you should be looking for buys on USDJPY. I believe the pullback is to fill these gaps, this fair value gap. We have one here, we have this here. So price has not gotten to this area. So once these gaps get filled, you look for buy opportunity. You would also see here that there was a shift in market structure on 15 minutes time frame. You can see we had a break of structure here, and a shift in market structure occurred at this point. Can you see that? A shift in market structure occurred at this point. So we wait for price. You would have applied your Fibonacci from this swing high to this swing. You wait for price to pull back to a discount area before you buy. And that is what we are seeing on the chart right now. That's what is playing out. So wait for a bullish reversal pattern to form. Let's see on 4 hour. Okay, you can see it has formed on 4 hour. This is a bullish reversal pattern. Okay, this is a bullish reversal pattern. But before you execute a trade, wait for shift in market structure on 1 hour, 15 minutes. So on 15 minutes, the shift in market structure should occur at this point. The shift in market structure should occur at this point. So you want to see price break this high before you start going bullish on USDJPY. I hope that is clear. So my bias for USDJPY this week is bullish. My bias on GBP JPY is USD sorry is bullish. Same for GBP JPY. GBP JPY, same for GBP. If you go to GBP JPY, it's the same pattern you will find on GBP JPY. You can see same pattern. Price has been in the range. Price has been in the range. You can see. So you should be looking for buys on GJ2. Look for buys on GJ. Okay, and if you are buying GJ, you could set your take profits at this high. These are areas of liquidity that might be cleared this week. So that's my take on GJ. GJUJ is buy. GJUJ is buy. I hope that is clear. So that will be all for today's session. Definitely you can identify other block and fair value gap on any chart. They are always there. Other block and fair value gaps are always on the chart, so you can always identify them. Victor, they are always there. Several other blocks, several fair value gap. You just have to know which of the other blocks and fair value gaps you have to work with. Okay? Any question, any question, any question, any question, any question? Any question, any question? I want to believe everyone participating in this live stream have an account with Capitals. I want to believe if you haven't opened an account with Cabana Capitals after this class, do that after this class. Okay? So that you can have access to the Zoom classes. Yesterday I had a session with clients. Okay, I had a session last night. Some of them are not in this class because they participated in yesterday's session. This class, they already know what to do. They already know the direction, so they are not here. So if you want to be Zoom classes, you should open an account with Cabana Capitals and fund it with a minimum of $200. Okay, for you to have access to the Zoom session, fund it with a minimum of $200. If you are participating in the in the Zoom session, you can't be blowing account. You cannot be blowing account. Okay, so fund your trading account and so you can have access to the Zoom sessions. There's so much you're going to learn there on YouTube. There are some things I would like to share that I can't share on YouTube. It has to be on Zoom. Okay, so ensure you open an account and get it funded. Get it funded. Don't stay too long on demo. Some of you are still on demo trading. Don't stay too long on demo. You shouldn't on demo account. You shouldn't maximum of 2 weeks. You should be done with demo. 2 3 weeks should be done. Go live. Experience the market. Okay, experience the market. That's the only way you learn how to trade and become a good trader. Not by demo. Okay. All right, guys. Wish you all a profitable trading day. For those of you on WhatsApp, if you have any question, drop your question on WhatsApp. If you're not on WhatsApp, send me a message so that you can be added to the WhatsApp group. Once more, I appreciate you all for your participation. Do have a wonderful day.